Good evening, guys. Welcome to another video brought to you by Total Control Traders. We are going through quite a few tickers today, so let's get right into it. First one, QS. So from what I'm noticing here, QS is still on the downtrend, still getting rejected on the daily 8, but well, we haven't even touched it yet for a while now. Even on the bounce on January 6th, we did not touch the daily 8. Sort of just grinding down on it right now, but from what I'm seeing, there's a potential wedge forming here. Gonna have to go into a closer time frame to take a look at this. Let's see how this works out. Somewhat of a wedge forming in here. There, yeah. The other thing I noticed as well is the bounce, the most recent bounce, only came back up and rejected exactly from the 0.382. So the chart is relatively weak. However, big picture in mind, guys. Look at this. Volume completely dropping off. So anticipating a major move coming up. Remember, guys, when we played this back here in beginning of January, that was only a temporary bounce. I'm looking for that big move. And where is this big move going to take us? Let's measure it. 1, 2, 3, 4, 5. Okay. So, most ideal case, this chart is going to go. First target, we'll be looking at up at 168. Of course, there's some resistances along the way. First one being where we bounce to 75. Makes sense. You can see that it lines up here. And then following that, it'll be gap fill up until 84.18. Then the next resistance is all-time high at 132.73. Then from there, we're looking up at 168. So, liking the setup of this. Still in the positions, and gonna keep eyes on it. Really liking the risk to reward down here. Yeah. Today's video is gonna be quite a bit longer because there's a lot of ticker that was requested, and it is weekend, so I want to make sure that I spend all the time that I can to go into details with each ticker for you guys, and make sure that we're going through everything that everyone's wanting to see. Okay. Next one, BNGO. Oh, and I'll try to do a time tag on this video, as it's going to be quite a lengthy one, so that it's easier for you guys to navigate through. All right, next one is BNGO. Look at that follow through. Rejected from previous resistance zone. Let's go back a bit. And now we've gone over it. This looks really nice. We've gone over it, came down, back tested, and what does it already look like? Okay, so gapped up, came back, back test, and gone. Still seeing profit taking. Bull volume clearly outweighing bear volume for the past 2 days. So chart is looking strong. Again, remember, this is not an easy ticker to be trading, as it doesn't react to fibs that well. But as mentioned, use the daily 8 as your guide. We're not too far extended on the daily 8 yet. I imagine you want to look out for that daily climax. There's no climax on the volume yet, so keep an eye out for tomorrow, see what the reaction looks like. But daily 8 is your guide if you're in the trade. Nothing, no major red flags for exits yet. Next, BBBY, Bed Bath Beyond, seeing some profit taking. Nice huge bull candle on Thursday, following minimal selling on Friday. Very nice chart. Gonna wait for that daily 8 to catch up. We'll likely see a bull flag setting up from here. gonna look something like this, while the daily 8 just grinds up, and then once it's met, gonna look for that next leg up. Very strong chart, minimal sellers. We can see that we wanted to go right before the earnings. Earnings shot it down perfectly, bounced from the lower trend line of the wedge. Then we just went. Again, same as the last one, same as BNGO. What is BNGO anyways? BNGO. Oh yeah, Bio Nano. So same as BitBats, similar to Bio Nano. Use the daily 8 as your guide. No reason for selling. We are seeing a lack of support developed through this move up. So we're gonna have to look back for previous supports. And there is still a lack of previous support too. So if this chart breaks down, make sure you want to be exit fast. You don't want to be the one who's bag holding, left bag holding at least. So daily 8 is your guide. Next, BABA. In the gap fill territory, decreasing bear volume, seeing gap up and then sell off. No major red flags. The only minor red flag I would say is generally when you're in the gap fill, what you want to see is just ideally you don't want to gap into the gap. So this open on Thursday, you gapped into this gap. Let me highlight it. Never mind, we were already in the gap. Okay, anyway, so we gap and sold off, gap, sold off again. Risk to reward is not that great right now, because if you measure this to the gap fill is 2%, and if it gets shot down, seeing the bear action lately, you're looking at minimum 5%. There is a lack and decreasing bear volume, but the RSI is trending up at the same time. So when the move comes, less likely to see a nice pop, because as RSI trends up, there's going to be less room on the upside. Next, BIDU. I will be incorporating these two tickers into daily review until the trend changes at least. Chinese tickers, especially BIDU, look at this. Strong bull action since November 25th. If you're in the trade, same idea, same as the last review. Use the daily 8 as your guide. No major red flags. It only closed under it once. Next day was bought up. So use the daily 8. If you want to be... Okay, weekly is a little bit more concerning. Weekly, we're seeing a spinning top candle, potential reversal candle. We are extended from the weekly 8. Seeing some bear volume coming through. Daily decreasing volume. Likely to form a bull flag from here. Even though it's a reversal candle, and we're seeing daily bear divergences from here kind of thing. We are seeing bear divergences, so we'll be seeing some downward pressure for sure, but as of now we are lacking bear volume. So same idea, daily 8 is your guide. Once we close under, if we break under and close under with bear volume, that's your exit signal. Next, FUBO. Decreasing bear, similar chart to QS, I would say, a little bit similar. We were in the wedge here before. Gapped up, kept running. Rejecting from the 0.382 of this whole move down. So it is stronger than QS, but now we're gonna see where we're gonna be bouncing from. So let's have a fib drawn here near that GP. Clear resistance zone here. We can see rejected, popped up. This is at 730. Yeah, gapped up into it, rejected, rejected. So this is going to be a clear zone we're going to be keeping eyes on. This could even be drawn back here. Yeah. Ideally, we don't want to be losing that GP. We did see increased bear volume, followed by end of day buying up. Minimal price action, but decent bull volume. No divergences. Decreasing bear volume on the daily. I like the setup. I want to see the reaction first thing Tuesday. Reminder guys, market is closed on Monday. US market is closed on Monday. So we want to see reaction first thing Tuesday. What it's going to do here. If we were in the GP, I want to see bulls come in. If no signs of bulls, remain patient. Gotta see what the reaction. And the next one will be in this zone. $29 to $26. All right, next PLTR. Faked us out. What a fake out. I can't remember. I think it was Friday, yeah. Yeah, it was Friday. What a fake out, guys. This chart is so hard to play. This ticker is so hard to play. Remember how when we saw the rejection from back here, I mentioned that ideally you want to see a clear break with bull volume. That's when I'll be entering. We saw that on Friday. Clear break, gap up, kept running on bull volume, clear bull volume versus any other previous days for some time. So entered the trade, got shut down, and increasing bear volume towards the end of day. So first thing we want to see Tuesday, reaction to the back test of this wedge trend line. We want a bounce right away from here. If we break down below with increasing bear volume, I'm be watching that 5-minute chart on Tuesday first thing. If we can see that there's a little bounce here at the end of the day on Friday. If we break down or even gap down and continue to sell with bear volume, we'll be taking the loss on this trade. It's a frustrating chart. If you want to be conservative, you can still use the GP as your guide. Actually, that might be, yeah, that actually would be a better stop. More conservative. Lines up. Thursday's bounce lines up with a GP. 24, 30, 37. This is the right GP? Oh yeah, it is. I think. Yeah, it's the right GP. Yeah. So 24, 37 must hold. We'll be using that as a stop. Hold on. This fib seemed to have moved a little bit. There we go. So keep your eyes on 24, 37. Next, NIO. Breaking bear. Decent bear volume. Lost at 88 for the first time since the move of December 30th. So it's a bit weaker than expected when we first reviewed the chart from back here. Not seeing a bounce from previous high. Kind of interesting. Let's see what the fibs look like. And guys, part of the reason why I choose to, or my style is to keep some of the fibs on the chart for all old drawings is I want to have a quick glance at the chart and be able to tell how the chart reacts to fibs. For BNGO, the Bio Nano is a little bit different because I know that I've looked at it a couple times. I know the chart does not react to fibs that well. This chart, NIO, it seemed to do okay with it. You know, technically, if you look at this one, we never closed under the 0.5, bounced. So that's why I keep this one on. And again, for those who haven't seen the video, I don't draw the 0.5 because it's literally right between the 0.382 and the 0.618. Just eyeball, you know, right in the middle. You'll know that it's, these two are bounces. So we can see right now with NIO chart, currently we're coming up to the 0.5, which actually lines up with multiple resistances. So you could even do this. This is your support resistance area. You can see that there has been rejection here, reject, closed under, and another 3 rejections here, gapped up above. So lack of supports here, likely to see the low end of this 54.2 met. And where is the 0.5 on this one? 54.61. So it lines up. Very minimal difference. Less than, what is that, 1%? But yeah, gonna be looking around this area. Gonna have to see that volume first thing on Tuesday. If it's increasing, this is probably gonna be negated. But if it's decreasing and we're gonna start seeing a curl or bounce from the 0.5, this is still valid. Yeah, it would still be valid. Alright, next one, FCEL. Fuel cell. Why is there 2 here? Give me a sec, guys. Let me clean up this chart. Looks a bit messy. Okay, so this one's from the low. This one's the most recent. From the low, this one doesn't work anymore. So this one's the most recent one. There we go. Sorry, been a while since I looked at FCEL. Alright, looking at this chart, we hit that target and rejected from the target. Decreasing bear volume, so it looks good. Earnings date is coming up, January 20th. Wow, already next week. So this sell completely makes sense. Met the target, bear divergence, minor bear divergence, huge bear volume, and that's why we're seeing significant bear action. GP is not too far away, which actually lines up with the previous high. I would even call it here. Actually, the more likely scenario would be this zone. So we got I'm on the 4-hour chart. We got 1 trading day before earnings. It depends if it's after hours or not. It could be 2 trading days. Anticipation, most ideal entry will be around this GP area, then see a bounce from there. We are seeing decreasing bear volume, so likely scenario. Next, YSG. I've never looked at this chart. Okay, so the next quite a few charts I've never looked at before. It's requests from our trading community. Let's take a look. YSG, what is this? Yatsen Holdings Limited. Just broke under and closed under the daily 8. ever since the run up of December 29th. So signs of bear is coming in. Bearish engulfing candlestick. Likely not an ideal time to be holding these. We are right in that support zone. It's hard to draw. You can't even draw a zone on these IPO kind of charts, but this is clear support resistance right here, about 18.5. You can see that, you know, we opened right on it, could not get over it, rejected here again, reject, then potentially serving as support right now. That's the only bullish scenario that I'm seeing. Closing right on support, gonna have to see what Tuesday's first thing open brings. We could very well, especially with this kind of bear volume and price action, we could very well see a gap down right, bringing us right below that support. Yep, right on it. Bear volume is showing up, clearly outweighing the bull volume. Wow, look at that sell off on that already. Jeez. Alright. Good time to remind you guys. Don't stand in front of a train. You can see this is a bear train right now. Don't stand in front of it. Even through the day. So this, as mentioned before, first opening of the day, you will always see a decreasing volume as it dies down towards lunch hour. But then from there, we saw a slight increase in bear volume. So don't stand in front of a clear trend. Already clearly bearish. Pulling back very decently. Let's see where the GP brings us. We're on the 0.5. Alright, so Tuesday, if we don't bounce, if you are still in the trade, which I hope you're not, this kind of bear volume on Friday, you would have wanted to exit on this candle. I already ate break already. But if you missed it and you are, for any reason you're still in the trade, this is your last hope right here. 0.5 fibs lining up with the support. If we don't see a bounce from here, say Tuesday, we gap down, let's say, we gap down, you want to see a buy up right away. If not going to be looking good. However, seeing this kind of price action, Tuesday will likely see a gap down, that buy up. If that's not the case, that would be your exit. We are seeing a bull divergence form on the short term, just because of it's something that you should suspect to happen, seeing the kind of sell-off that we're seeing. So there's a bull divergence. Might actually play this on Tuesday for the bounce. Really nice bounce. Let me make a note of this. Yeah, liking the setup. If we see a gap down, bull divergence might still be intact. Then from there, gonna play the bounce. Short-term scalp. Next, LAZR, Luminar, LAZR, Luminar. Slight bull divergence on the 15. Yep. Slight bull divergence. Okay, never mind. Not slight bull divergence. Breaking our trend line. Seeing weakness here. Not a good chart to be in. You look at the bull volumes, guys. It's nothing substantial except for, what is this, Wednesday? We saw a pop in bull volume, but with big upper wick. Even if you look at the previous ones, lack of bull volume, plenty of upper wicks. So this shows that there's lots of sellers on this chart right now. Even with bull volume, we're unlikely to see any decent follow through. Let's see how the wedge is working out. Seeing somewhat of volatility towards Wednesday, Thursday, Friday. A little bit hard to draw a wedge on here, but there is somewhat of a wedge forming. Let's see how this works. Doesn't matter how you draw it. Most trend lines have broken bear already. The last hope would be if you run from this one back here. Oh, this is IPO. And daily's being tricky again. Okay. So if you run from the IPO day up until the second low, this would be your last hope. Last saving grace. If we don't see any bull action or any sign of curl from here, this is likely to be on a downward momentum for quite some time. Increasing bear volume on the hourly chart does not look good. Next, ACER. ACER Therapeutic. Nice pop. Nice bull volume. Suspect this is most likely news related. Look at this bull volume, guys. The highest bull volume ever. However, if you look down into the long-term chart, this is a clear downward momentum in a clear downward trend. Potential reversal. Wow, what is this? Going back to 30,000 and now we're down to $3. All right, guess risk to reward wise is there. We are still in a downtrend, likely a wedge forming now instead. So let's do the close. Weekly wedge forming. Huge bull volume. We held the low. That's good. Potential sign of reversal. Lots of upper wicks. We know there's been the bag holders on this name for sure. If you're coming down from 30,000 down to $3, there's gonna be bag holders. So we're seeing sell pressure, even with the highest bull volume ever. Not a very liquid chart to be trading in. Look at this. Even on the 4-hour charts, if you're in this name, anticipate sometimes you're not gonna get the ideal exits or entries. No movement on the 4-hour chart. Very illiquid. Yeah. My anticipation is we will see further downside. Right now, it doesn't the risk to reward on the short term, which is daily wise, doesn't really make sense. First, very illiquid. It's gonna make it hard to trade. Rejecting from the trend line. Most ideal entry, wait for that revisit, or even golden pocket. We might not get another revisit to the lower trend line because of the bull volume that we're seeing, but we'll likely see at least the 0.5, which is around 339. Next one, EAT. Nice upward momentum. Brinker International. Clear channel forming. Earnings dates coming up January 27th. Play with the channel, guys. You're gonna want to use the longer time frame as your guide on this chart, guys. Weekly 8, we can clearly see that we haven't really broken down under. It's a relatively strong chart. Every time we've broken down under, except for the pandemic time, we broke down under, held, but got bought up. Broke down under, got bought up. So this kind of chart, this kind of name, it's either you play the really long game, because it's going to be a slow grind up, or you can play the really short game, because there is such nice profits to be made within this kind of up and down kind of thing. You buy here, somewhere around the bottom, sell here. You just play along with the channel. As long as it gets closer to the lower end of the channel, you buy. Gets close to the upper end of the channel, you sell. You know, there's lots of money to be made here. Or you could just play the weekly. And remember, guys, swinging is where the real money is made. Had you swung from anywhere near, we won't say the lowest, but somewhere here, that's 640%. This could be actually a very nice volatile chart for day traders to be playing. 50% backwards, 70%. I'll be taking a look at this chart a little bit further. Gonna do some analysis on it. Looks like a decent day trading chart. Thanks, iTrade for Chanel, for bringing it to my attention. Looks great. Likely to see a little bit more downward pressure from here. On the daily, seeing bear volume, just broke the daily 8. Look for reaction at the bottom of the channel. Next, AMC. AMC Entertainment Holdings. Spiking below volume. Friday. Seeing an upper wick. Likely news related, I imagine. Highest bull volume day ever. Very similar chart to, I think it was ACER that we looked at. Clear downward trend for a long time. So if you were to play this chart, just zoom out to a longer time frame first. Make sure you know where the longer time frame trend lines are. And this one seemed to have a clear one right from here. Gonna be a bit harder to draw, so right about here. That makes sense. Right. What if it's from back here? Do we have an even longer trend line? You could even say, from back. I can't get it. There we go. No, I can't see the chart. Sorry, bear with me, guys. Let's get this perfect. Somewhere around there. Does that work? Oh yeah, it works. Yeah. So this is your clear trend line to get over. Ever since our last downward movement, reject. Came up, slightly popped over, closed over it. Huge rejection from it. Reject again on November. Nearly touched it. made a new low. We could be looking at a monthly bull divergence. Yeah, so slight monthly bull divergence, guys. Slight monthly bull divergence with increase on volume, low risk trade. Looks very nice actually, especially with a volume pop. Yeah, ideal area to be entering the trade. Held the 0.5. Even if you were to enter here, let's say, you know, the close of Friday at 2.33, it's looking like it wants to have more upside. You can expect around 3.4, the trend line. Then watch closely what the reaction to here is. That alone is about a 50% move. 40%. Depends where we touch it. 40 to 50%. So decent area. Clear stop as well. Right here, 2.13, double bottom on Thursday, Wednesday, Thursday. So low risk trade. Next, let's see, FRSX. Looks like nice continuation. Lots of upper wick forming. Potential increase on bull volume. Extended on the 88. Bear divergence. A lot more downside. Risk to reward does not justify entries. I would anticipate a little bit more downward price action to at least touch the 88. Then we gotta see the reaction from there. Somewhat similar to the chart right here. So let's make a note of it. Let's revisit this chart. I anticipate something like this. ETMC. Request from our new member, Stanley. And we're already 38 minutes in. So as mentioned, it's gonna be a lengthy video. Make sure you take some water breaks. We'll try to time mark each tickers. Right. Reacting to the 88. Bear divergence. Or no bear divergence. Nice consolidation on decreasing bear volume. Chart's looking strong. The thing I don't like about it is where we stalled. We didn't even get to touch this previous high, and then we stalled already. There's one thing that when I look at this chart, I don't like it. But clear strong bull momentum, increasing bull volume, followed by decreasing bear consolidation, holding the 88. With these juniors or small cap names, you gotta be careful on moves like this, because last time it was exact same idea. Increasing bull volume, lack of sellers, holding the 88, then boom. Wasn't even because of earnings either. So some news caused this, I think. Some news caused this. Then we sort of, it actually worked out perfect because we lack of volume here. Ended up filling the gap. Look at that. Fill the gap. One penny off. Or 1 penny over, I should say. Then from there, it just ran. So if we're looking at similar scenario, watch for the gap fill here. If the gap fills at $1.10, would likely present a decent area for entry. Golden puck is around 1.13 to 1.16. So let's say, you know, we're gonna see something like this. We gap down and then wick right below to fill the gap. Exact same scenario here. Wick right below, fill the gap. Never closing under the GP. That would make sense. See, very similar scenario. Very similar scenario here. GP. We did close under the GP once on the day of the wick. Okay, maybe a few times. But it's gonna be something like that. That's what I'd be looking for entry, around the $1.10. Then you're gonna have a clear stop as well. Keep it tight. About $1.05, $1.05. If you want to, for the real money and play for the long term, 82 cents would be your stop. But if you enter here, $1.10, I'd be looking for a break upwards. Next, FPX. Nice bull momentum. I am seeing a channel. Not too clear. Let's try this. Try to draw it out. This actually works perfect. Yep. What does the lower end look like? I want to say the lower end here. Yeah. And then we can draw another line if anything. It's more like a pitchfork, I guess. Something like that. So it's basically a pitchfork. I mean, there's a better way to draw this, but I want to make sure I highlight all that's in the area. So there's the upper side of the pitchfork, the channel that's strong. Then when we break down under, we sort of stay down here. Now we're in the upper side of the channel again. Holding the 88. Nothing notable on the volume wise. There is a bear divergence, so would anticipate to see a little bit more follow through and break of 88. In that case, look for reaction around this. It depends on what the volume looks like. We could be seeing a beginning of an increased bear volume. If that is the case, witnessing on Tuesday that we are increasing, slowly look for a reaction towards this lower trend line. Which trend are we? FPX. Next one, BNS, Bank of Nova Scotia. It's looking nice. No significant red flags. We are forming or just confirming a bull flag continuation pattern, as you can see here. Bull flag confirming right now. No red flags. Bulls is still strong. There are bearish divergences forming, but if you are in the trade, which I know you are, use the weekly 8 as your guide. Look at that. Look at that bounce. Stall. Yeah. Looks like the move is just starting. Well, I wouldn't say just starting. It's halfway through. Use the weekly 8 as your guide. Right now, 82 or 52, 53. Next, MEG. I believe you are referring to MEG Energy Corp. Clear break on the day 8. Significant bear volume, significant price action. Bull flag seem to potentially be negating now. Weekly still looks good. If you're in the trade, weekly 8 definitely your guide as we form a bull flag here. Actually, what it looks like it happened here is a bull flag had formed here. I'm just gonna draw the flag from now on to save the time for the poll. Yeah, the flag had formed here. We confirmed, and then we're coming back right away. So that's a red flag. Increasing bear volume as well. Earnings not too far away. Watch for a reaction on this back test of the flag. If we break it on volume, that's an exit. Already broken the day 8. You don't want to see a trend reversal. What could very well happen from here, guys, is lower high. That would line up with all these previous areas. Lower high, then come down a lower low. Oh. So if that is the case, watch for reaction up here. If we're seeing bulls having lack of momentum, that's your exit signal. Woo, long video. Synovus Energy, same idea. Energy plays, same idea as MEG. Not gonna get into it. Increasing bear volume, broken in the 88. Look for that higher low, and then look for the reaction from it afterwards. Whether it's gonna be a higher low or whether it's gonna be a lower high or a higher high. Ideal price to hold, $6. Next, BBD, BNGO BBBY. This oil and gas too. Price action looks like looking a little bit like oil and gas. Bull flag forming. Weekly 8 is your guide. Huge upper wick forming. We might close under the weekly 8. That'll be the exit. If you're looking for entry, if you're looking for entry, 0.382 makes a little bit of sense, but it is that wouldn't be what I'm looking for personally, just because if we touch the 0.382, it confirms a trend reversal on the daily. We might see a bounce from there, but we're likely to see further action down. So ideal entry would be around the golden pocket. You can see it lines up with previous resistance areas. Around here to here. So this is your ideal entry zone. Twitter. Right on the support and trend line. Been a while since I looked at this chart. Let's clean it up a little bit. What a fake out. Wow. Fake out, breakout. Or breakout, fake out. Got shot right back down. Right on resistance, or yeah, previous resistance zone right now. Along with the trend line. Want to hold this area. Draw it like it is, hey? Makes sense. Tuesday, first thing Tuesday, we see a break under. Might be a good short-term scalp actually. Oh yeah, we're seeing both divergences here. if we see a gap down on Tuesday, could be a very good short-term scalp play. It's oversold on nearly all time frames now. Adding this to the watch list. But then from there, all right. So if you're interested in the bounce play, what you'd be looking at first thing is the daily 8, which likely Tuesday will be a bit lower. So the balance you'd be looking probably around somewhere around 47.5. Ideal bounce would be right below the gap fill, 49 bucks. Wait for the trend to confirm on the daily. It looks like a hard chart to play. You know, you see a breakout, big gap down, back test. You see a breakdown, big gap down, back test. So we could be seeing another following action, such as from back here. Very similar. Could be a good play. Next, DTSS. I don't know if I'm looking at the right chart. Okay, so there is one, only one. Data C. I gotta check back who give me one sec, guys. Just gonna check who requested. Okay, Stanley, you're gonna have to confirm whether this is the right chart. Doesn't look like a good chart to be playing. Is complete chop. So when you look at, you're gonna have to explain to me what you're looking to how you're looking to play this chart, because from what I'm seeing is somewhat like a VIX chart. You know, you just see a long-term downtrend followed by that one gap. So you're either gonna wait for that one gap to sell it. You're gonna have to sell right on time too, because look at these wicks. Come on, guys. All right, yeah, look at these wicks. Look at these selling. I don't know if you're looking for a long-term return wise, or you're just looking for potentially this gap fill. But it's gonna be a hard chart to play. Anyways, we'll talk. Yeah, we'll talk. We'll talk in the trading chat. Next one, score. Look at that amazing follow through, guys. 292. I think I sold somewhere around 270 some. No volume climax. Extended from the daily 8. No significant red flag yet. Just right, guys. There is, congrats, score bulls. There is no red flags. And this does not apply anymore because we did come back down to back test at 0.382. So I re-entered around here as planned, sold around 2.7. Then seeing continuation today or Friday. Doesn't hurt to take some profits along the way. Make sure you keep a core in. This chart's gonna go in 2021. Keep your eyes on any higher low that it provides. It'll pay very nicely. Just look at the most recent move. From the double bottom, 127, 127, 127. Triple bottom, we have ran 136% in 16 trading days already. That's 3 weeks, guys. 3 weeks, 136%. Amazing. So keep your eyes on score. Never taking it off as a top chart to be watching. We'll be looking for that daily higher low. On the next pullback, I would anticipate a break of daily 8 with a little bit of follow through. but we're gonna have to see what the news and what the price action brings us. Air Canada. Alright, so it looks like it got affected by the market on Friday. Finally, we saw a breakout on Thursday. Then market affected Air Canada on Friday. Overall, potentially the daily higher low. We can see what's happening here. Lower low, lower high, higher low, lower high. So we were in the wedge, higher low, then we broke out, higher high. Now we're potentially looking for that lower high. From here, sort of just grind out kind of thing. Okay. Playing this via long term, so not gonna be paying too much attention to it. Same with Suncor. Similar chart, a little bit more bearish than Air Canada. Not seeing significant bear volume, so not worried. We did break the daily 8, and we did break under previous high. We'll be watching this first thing Tuesday. Don't really want to be giving gains back. But if you're looking at the long term wise, this is the upper zone that I'm looking at. Target of around 38 bucks to 40. Yeah, in between 38 to 40. So we'll be keeping an eye on it on Tuesday, but we'll likely not be making any moves on it. We did getting around the GP, so there is still lots of room. 18%, not really too affected by it. Next, CNR, and this is the last one. Canadian National Railway. Nice. Low bear volume, seeing a bounce with bull volume. Gonna watch for that continuation on Tuesday. Charts looking nice to go. Only concern, earnings coming up January 26th. However, from here to the 26th, I imagine that we will likely, it's either going to be, we're going to have to see the reaction to in this area, the previous high. We'll likely either form a wedge or we'll just straight break bull, because seeing this lack of selling. Alright guys, getting a bit of a headache from such a long video. Hope you enjoy the content. I think today we went over, what, 27 tickers? If you like the contents I'm putting out, make sure you hit the like and subscribe button for that daily update video. Stay safe and be in control. I look forward to seeing you guys on the next video. Thanks for watching, guys.